Hello, ladies and gentlemen of Facebook. This is Adam with The Highest Return. You can subscribe to my website at thehighestreturn.com or just go and join my Facebook page here at facebook.com/thehighestreturn. I'm just going to do a brief overview of what we're dealing with here. It's May 31st, 2021, and stocks are at an all-time high pretty much, and we have a lot of margin borrowing. What this means in a nutshell is it's risky. There's a lot of fuel to basically bring the stock market to its knees if anything happens. So when you start to see rates going up, yes, the stock market may crash because of this high margin debt amount. Real estate. Real estate is also at its all-time high pretty much, and interest rates are pretty much at their all-time low. We still have stimulus going on. We have forbearance going on. We have unemployment benefit bonuses going on, which are keeping real estate very frothy. The building costs are pretty much as high as they've ever been. We have high lumber prices, very high copper prices, and high steel prices. Future inventory, it's going to go up eventually, but we'll see how high prices go before then. Crypto, Bitcoin crashed from its all-time high of around like $65,000 per Bitcoin. Right now it's trading at around $36,000, give or take, per Bitcoin. Ethereum actually has done better than Bitcoin in the past few weeks in terms of its recovery. For those not familiar, Ethereum actually has more functionality than Bitcoin does. They have some sort of basically a functionality called smart contracts, which basically say if something happens, then this happens. So it's basically a little bit of logic built into the Ethereum blockchain that Bitcoin doesn't have natively. The other thing is Bitcoin. Recently came out that Elon Musk bashed Bitcoin for consuming too much energy. Ethereum's not much, it's better, but it still also consumes a lot of energy. And, if you think about it, Bitcoin consumes less energy than gold production does. So should we ban gold? I don't think so. But Bitcoin's taken a hit from that, and it's always very politically popular to bash something if it is not good for the environment. So that is not good news for Bitcoin. But the good news for Bitcoin is the tokenomics in terms of its maximum supply of 21 million. That has not changed. So over time, I do believe that Bitcoin will go up. I'm not a financial advisor, but I think that Bitcoin will make a recovery. It may take a few years to do so, it may take a few months, but I believe it will make that recovery. I've been around back in when Bitcoin went up to 20,000 back in 2017, and I witnessed it go all the way down to like what was it, 3,000 or less, and I don't see it going to zero ever. Digital national currencies. So the U.S. is actually exploring doing a digital national currency. I don't think that's good news for people that value their privacy, but we will see what happens with that. China's already, I think, rolled out their digital national currency. If you thought you had an iota of privacy before, then you could think again once that gets rolled out and if paper dollars get abolished. Laws, regulations, yes, I believe that the regulations will come down hard once the digital national currency has stolen the technology from the existing blockchains. Other credit card debts, they are down. Actually, they're down to, looks like levels seen back in early 2017, which is good. Basically, people saving money and paying down their credit cards as they get more cash from the government. Probably the stimulus helped a little bit, if not a lot. And then working from home, spending less, probably also contributed. I do expect that to go up dramatically, actually, in the next few months. It probably will go back up to 0.8 trillion, I'm guessing, in the next few months as people go out and spend on stupid things they don't need. That could happen. All right. The other thing, last thing that I want to mention about the credit card debts, if you haven't gotten an email about it, then you're lucky. I've gotten a lot of these already. Promotional APRs. Okay, for the next 8 months, we will only charge 1.99% APR on all your purchases. Obviously, going back to the original APR once that promotional period is over. Do not get sucked into this trap. You don't want to actually be holding balances on your credit card. What is the point? Just pay off your credit card every month, and if you can't afford it, do not use it for that purpose. Um, Unless, yeah, there's no magic that's going to increase your salary suddenly when the promotional APR period is over, that you'll be able to afford what you bought during the promotional APR. So unless you are buying investments and are lucky, it is a very bad idea. The closest thing I can think of with this would be potentially buying the dip in crypto, or buying precious metals, or basically buying yourself a job. Like, if you needed to buy something that you could use to make money with, like a tool, for example, like a lawnmower that you need to use to mow lawns and make cash flow to pay back the credit card before the promotional APR ends, then it may make sense. But for the vast majority, people don't really need to use the promotional APRs that are being sent out. They're just a trap, as they say in Star Wars. So that's all I had. Again, this is Adam with thehighestreturn.com. Feel free to go to my website and subscribe. Or go to Facebook and search The Highest Return, and then I have a page there, and also a group under the page where you can ask me any questions. I have invested in some real estate deals, and I'm currently a landlord, renting out a few properties. So I have some experience in that, buying and selling properties, and stocks, and crypto. And I wouldn't say if we're in a bar, but if you ever feel like messaging me about my Dogecoin experience, well, yes, I was one of the people who sold 500,000 Dogecoin too early. I made a $2,000 profit when I could have made almost a $500,000 profit. It would have changed my life, because I would have been able to buy more investment properties and not necessarily have to work to keep saving up seed capital for more. But that is a story for the ages, I suppose. This is Adam signing off.